Could ITC aid the move today? I think that's a question that we need to ask to an expert who looks at very, very closely. Because again, on the pre-open session, it's starting off very well. Amnish Aggarwal, Head of Research at Prabhudas Lilladher, joins us right now on the show. Amnish, great having you. Thanks so much for joining in. So it's now well documented and well telegraphed that it's the last day to buy if you want to be eligible for the record date. Is it worth buying the console ITC right now for a gain due to the sum of parts, or rather due to the demerger later on?
Okay. Hi. You see, ITC Hotels is a profitable company, second largest player in the hotel industry in India. And it has aggressive expansion plans also over the coming few years. Now, if you look at the current context, I think the company had an EBITDA of more than 1,000 crores in FY24, which over the next 3 years should easily go to 1,500 crores. So if you look at that number, then one needs to look at basically how the industry is poised. The travel industry is doing very well today, and most of the stocks, if you look at the large ones, they would be trading anywhere between 30 to 40 times on, say, EV/EBITDA basis. So if we do the simple maths, then going by that, I think the stock has the potential to, you can say the fair value would be anywhere between 175 to 200 rupees per share. As it, you can say, stands today for the independent, your ITC Hotels share. Now, as far as the ITC is concerned, I think in the SOTP, there might be, you can say, a reduction of something like, say, anywhere between 15 to 20 rupees to the target price due to this move. So shareholders will get, say, one share for every 10. So which effectively means that if the stock price, say, hypothetically, say 175, 180, so you will get 18 rupees out of that. But buying an ITC stock, you see 18 rupees out of, say, 475, 480 is just around, say, 4%. It is not that big a component. But having said that, long-term prospects look good. That is number one. The second is ITC stock as such seems, I think, very delicately poised because one, this demerger is there. Then you would be having, say, budget next month, which will give some indication of if there is any change in the duty. And the third is the likelihood of interim dividend, because ITC usually gives interim dividend with 3Q numbers. So I think these three events are going to be there. So if one buys an ITC stock today, so there's a likelihood of the investor getting, say, around, say, 20, anywhere between 22 to 25 rupees in the form of dividend in this stock. And if I reduce that, I think there seems to be a fair bit of chance in ITC. If the budget goes on smoothly and there is no big tinkering happening over there, there's a chance to make, say, around, say, 10 to 12% return over the next 2 to 3 months.
Amnish, just one question. Now, this is the pure fundamental view. I'm trying to add a tactical layer here to this. If I buy ITC right now, what is the shave off that happens of my ITC share due to the demerger of the hotel business? Because I thought the book value came into 37, 38 rupees, right? And it's one share of the hotels for every 10 shares held. So is there a tactical gain here that you buy this, and once the demerged entity comes into it, there is a chance that the combined price of ITC post demerger and the hotel business, one share for every 10 shares, would be more than the 490 odd that you're paying right now?
That's what I'm saying, that if you look at the total, say, SOTP of ITC today, for example, if I look at, say, our target of ITC, so the contribution of hotels as of now in that is not more than, say, 5%. Okay.
So but that's 20 rupees, right, Amnish? That's 20 rupees any which way. So, I mean...
No, it's something like, say, 26, 27 rupees. But at the end of the day, ITC will continue to hold 40% in that company.
Right.
Okay. So in terms of reduction in the, you can say, value, that, as I said, it could be in the range of 15 to 20 rupees as far as SOTP of ITC goes. Okay, so the gains to the shareholders is not likely to be anything disproportionate in the time being, unless and until market assigns it a very high EV to EBITDA, like it has been doing, say, for Indian hotels.
Got it.
In the normative case, one can expect it to trade at, say, an EV by EBITDA of 25. Now, if market gives it 35 times EV EBITDA, then obviously there could be, you can say, some gains.
Got it.
But given the fact that the ratio is just 1:10, it is not likely to be very big gain.
Got it. Amnish, okay. Thank you so much, Amnish. This is what we needed. And thank you so much for giving us this perspective. Really appreciate your time. And